Riksbank has hiked. It's currently hiked its benchmark policy rate to 1.75%. That is a bigger hike than many market participants and economists had expected. The estimate had been to move that benchmark up to 1.5%. They've gone bigger. They've gone to 1.75%. That is the Riksbank coming out with a bigger than expected hike. I'm just going to check. Currently, the krona gaining 0.5%. So a 0.5% move against the single currency, against the euro on the back of that news. This is the biggest hike then for the Riksbank of Sweden, a full 1 percentage point since for about 3 decades. It is the only second of the big G10 FX countries after Canada to hike by 100 basis points, by a full 1 percentage point. And this may well add pressure, at least speculation, that the Fed will go bigger than 75 on Wednesday. Concerns about the housing market, certainly in Sweden, whether this tips things into something of a housing market crisis. But on the flip side of that, inflation running at 9% has clearly been the key factor behind this decision. Again, the markets had expected the benchmark to be increased to 1.5%. It was, in fact, increased to 1.75%. The Riksbank, just a couple of additional lines coming through. Asset purchases are expected to cease at the end of the year. They will continue the asset buys in accordance with the June decision. And here's another redhead. The Riksbank rate will be raised further in the coming 6 months. So the Central Bank of Sweden hiking bigger than expected and flagging further rate rises in the coming 6 months. Gains of 0.5% for the Swedish krona against the euro. Let's bring in Kristine Aquino from Bloomberg Market team, of course, for reaction to this. So they went big, and they went bigger than many had expected.
Absolutely, Tom. And this really is the name of the game, it seems like, among G10 central banks this time around, is really focusing on those bigger than expected rate hikes and providing that shock value to markets. I mean, 100 basis points from a developed market central bank. I mean, this sort of rate hike, even just a few months ago, you really would only see that from an emerging market. But we've come such a long way in just a short span of time. I think a lot of that is, of course, added pressure from the even bigger central banks, the Fed primarily, really, again, entertaining that idea of another 75 basis point rate hike, potentially 100 basis point rate hike. And you would expect these smaller nations with more open economies to follow suit.
Do you expect markets to start to price in an even bigger hike from the Fed? 75 basis points up until this decision had been consensus, essentially, for the Fed on Wednesday.
Yeah, absolutely, Tom. I mean, this is the nature of markets, right? Is to kind of overprice something, especially heading into a big event such as the Fed. And so I would expect over the next couple of days, definitely keep an eye on that pricing, specifically for this week. But also, more importantly, the trajectory of where the Fed rate is going to be over the next few months. I mean, we have already seen that peak terminal Fed rate being priced at 4.5% sometime in the first quarter of next year. And of course, what's interesting is what markets expect to happen after that. According to market pricing, that rate is going to sharply fall off by about 100 basis points over the year, starting from the first quarter of 2023.